All right, as promised, we have a couple of managements joining us now. CG Power posted a steady set of Q4 numbers. The company saw good EBITDA and revenue growth. Gross margins also expanded, and the order intake that the company has witnessed is over 2,000 crores in Q4 of this year. Natarajan Srinivasan, who is the managing director at CG Power, joins us now to talk about that. Mr. Srinivasan, thanks a lot for joining in. It's a big turnaround that the company has seen, and kudos to you and your entire team for that. Now the company is debt-free as well. You've managed to hold on to market share in key segments and grow those businesses. Can you tell us a little bit about what the next 1 to 2 years could look like? What is the main focus area for CG Power now? And what kind of reasonable growth are we looking at across segments?
So as you know, we operate in 3 businesses, industrial segment consisting of motors and railways. And then there's a power segment where we manufacture transformer and switch gears. All the 3 divisions are doing well. External environment is helping to the capex survival, both in the private sector and also in the government sector. The good amount of demand we are seeing both for all the 2 divisions, our division as well as industrial division. Next to 2 years, I think definitely we can expect a double-digit growth. It could be around 15% of the top line, and also accompanied a similar amount of growth we can expect in the bottom line.
Okay. Right. Mr. Srinivasan, so in FY23, I think you said you will do 6,500 crores in revenues. The last time we spoke, and you've done almost 6,600. That's a 28% growth.
I said 6,000 plus. Nigel was wanting me to put a number.
That's correct. Okay, I have 6,500 written down, but you've done far above. In any case, even beating that 6,500, and of course, if it's 6,000, then it's a 10% beat on top of that. So that's a 28% growth, sir. And you're saying in 24 you'll do a 15% growth revenues?
So definitely double digit, maybe around 15%. Definitely, it's possible.
So there is a. So you say FY23 was because it's largely a function of the base, very low base, and now growth normalizes a little bit. Go on.
So I agree with you. FY23, I think it's the highest in the last 11 years. If you compare apples to apple, earlier the company had consumer division. If you remove that, an apples to apple comparison is last 11 years is the highest in terms of sales as well as in profits. So I think from here onwards, to grow further at a large base of 20-25% above. Of course, we will. Right now, we had capacity constraint. Therefore, we have just started our expansion projects. Future growth will come from exports. Apart from local demand, we will also trying to focus on exports. So that will happen not from 23-24, from 24-25 onwards. We'll like to focus on exports.
All right. Hi, good morning, Mr. Srinivasan. And it's looking like a good set of numbers. So let's focus on that point a little bit more. Exports as a percentage of revenues, how much are they as of now? And where do you see that number headed? And also, I think the railway revenues, they're around 1,300 crores odd. What kind of growth are you looking at in this particular vertical?
So railways, unless we are able to tie up some technology or participate in large project in a consortium, we will continue to grow only marginally about 10 to 15%. Bulk, a large growth can come if can participate in projects, or for example, right now, 200 sets of Train 18, Vande Bharat train orders have been released, 120 for a Russian consortium, another 80 for BHEL. So these are valued at, this 120 sets are valued at 15,000 crores. So we are talking to them for doing some work on a contract basis. We are talking to all the existing, both the players actually. If we get some opportunities there, then probably our growth can grow a little bit.
And also on the exports, sir, so you're saying railways will grow by 10 to 15% or that's a steady state. And what about exports?
The exports is for both for transformer as well as for motors. Right now,
yes,
very little exports that is taking place in motors. We want to target at least 10% of our sales in of motors. Transformer, actually, domestic demand is very strong, so we are also expanding our capacity. Subject to capacity being available, we can also export. There's opportunity for exports in transformer.
Okay. Sir, you said that 10 to 15% growth in railways. Can you just quantify it for us? What is the order book currently in the railways for your company? And what is the incremental visibility that you're getting in terms of the Vande Bharat orders? When does the execution kick in, and in which year will you see it hit your revenue stream?
So right now the order book is close to 900 crores. I can't comment on Vande Bharat because they're all tender based and then subject to our participation with somebody else, etc. But some large tenders are to be finalized on our existing products, like traction motors, point machines, etc. So those orders itself will come in the first quarter. So whatever is really required that can be met out of our existing products, whatever we get in addition on the projects, either by of subcontracting or participating in new tenders, they'll be additional. I'm not counting them.
Okay. And you were telling my colleague Nigel about the export orders. Can you tell us eventually what's the plan with exports, in the sense what percentage of your total revenues could come from exports, say 2 to 3 years down the line? And what would this mean for the operational performance? Will it pick up further because perhaps export margins are higher?
So exports target will be, you can say, about 20 to 25% of our sales over a 3 to 4 year period. So margins, we cannot comment at this point of time because it will depend on the dollar exchange rate, then market opportunities, etc. But if it is not profitable, we will not export.
Okay.
All right. So just one more question. If you could tell us, with the current capex and the current gross block that you have done around close to around 6,500 to 7,000 crores, and you're talking about growth of mid-teens. Tell us, what is the peak revenue potential that the company can hit with the current investments, and also a broad margin number? I think you were guiding for mid-teens earlier, and that's what you've achieved. On a consolidated basis, what kind of margins are we looking at?
So capex, we have for the project expansion, both for motors as well as for the transformer business. Our total capex is about 375 crores. In addition to that, last 2 years, we have cleared about, totally we have put about 300 crores of normal capex, out of which only 150 crores have been spent. Another 150 crores is being worked out, actually, can be spent probably this year and next year. When everything is completed over the next 4 to 5 years, I think we can expect to double the size of the company in terms of turnover. So, because, while capacity will come in place, production capacity also will be there. But, the entire production cannot be produced immediately and then sold.
Okay.
Therefore, over 5 years, this whatever we have done, our 6,500, we can hope to double in over 5 years.
So 14,000 crores. And on margin, sir, in the near term, FY24, what kind of a margin number are we looking at?
So we discussed this earlier also. 14% EBITDA, if you are able to get it, will be a good number.
All right. So around what you've done in the fourth quarter. Thank you very much, sir. Appreciate you joining in and running us through all of the details. And good speaking with you, as always. That's CG Power. Now,